Hello everyone, welcome to Just Invest Today, and in today's video we are talking about Palantir and if its fair value is actually worth $5. Yes, this article came out saying Palantir is worth $5 and at this price target right now it's actually overvalued. So we have to read this article, see what it's saying, seeing if we agree or disagree, man. And if you own Palantir, you should pay attention maybe to this article and see if it's telling the truth or if it's lying, if you have an alternate thesis on what's going on in Palantir. So right now Palantir is trading at $16, and think about it, in February 10th, 8th it was at $38. So it's taking a huge hit, almost a 56% hit in the stock price, and people have been buying Palantir thinking this is the perfect opportunity to buy this stock. Before we get into this video, guys, can you please like it, subscribe to my channel? I'm always providing you with so much new content, man. So come on, click the subscribe button right now. Click it, click it, click it. So Palantir is like a big data analytical company. It takes a lot of data from their algorithms, from collecting data on its platform and using it for intelligence, defense, for different types of businesses, small businesses, big corporations, all of that. So it has Palantir Gotham, Apollo, and it has Foundry, and they use these platforms basically to collect data and share it to different companies, to different entities like the government for defense and intelligence, all of that good stuff. So that's basically what Palantir does. This is a company that's been in power since 2003. That's when it started with Peter Thiel, with Alex, all of those members. But think about it. Palantir, one of the biggest negatives about Palantir is that it's not profitable, and it hasn't been profitable since 2003. That's a long time to kind of get your company profitable, to see an actual positive outcome in the bottom line, and Palantir hasn't showed that. So that's probably the main thesis why this guy is saying Palantir is a fair value of $5. Just think about that, $5. So he's saying it still has a long way to crash. So let's read some of this article and see what we can find in this article to see if we agree or you disagree. So Palantir stock has slumped to a 52-week low. It's true. Nonetheless, Palantir stock is overpriced with a market capitalization of $35 billion. So he says $35 billion is overpriced in the stock. Palantir stock is set to fall further due to lack of a defined moat and scalability in its business model. So he's saying Palantir doesn't have a defined moat. So when you think about Palantir, what can we say is the key thing that differentiates itself from all the other competitors in this data space, in the algorithm space? Like, what can we really say that it's better than? Is it better than like Google, Facebook, Amazon, all of these companies that use data, use analytics, all of those things? So does it have a better brand? Does it have do they charge lower prices? Like, does it have a network effects? Like, you only can use Palantir for its data? Like, what separates Palantir from the competition? And that's a question you have to ask yourself if you really love Palantir. It's scalability. So we know that Palantir gets a lot of money from the government and using government money to actually supply its technology and help its technology and grow its business, right? So they're into the intelligence, into the defense, and people are seeing that has a certain limitation because the government has a certain ceiling on how much money they can spend. But on the other side of that, people are saying Palantir is going into different businesses. They're not looking at just government. They're looking at businesses that can actually use that data and improve its metrics on their customers, on their supply chains, on the products. So people are saying, no, it's not just the government. They have more business in other places that are going to promote this business as being one of the top data businesses in this field. Palantir is doing an excellent job of selling its data collection algorithm-based prediction business to investors with a steady stream of announcements announcing new contract wins with various governments, man. Palantir's biggest win was the $823 million US Army contract, which the company proudly announced in October. Other contracts followed, including a $43 million space systems command contract for its delivery on data aggregation and decision platform. Palantir's revenue is expected to increase by 30% this year, bringing the company's total revenue to just under $2 billion. The growth may appear to be impressive, but it's backed up by substance as Palantir has no profits In fact, the company has a staggering 5.3 billion accumulated deficit, demonstrating that Palantir has failed to create a business model capable of delivering sustainable profits over the last 2 decades. How many more years of losses are investors willing to accept before they can share in the company's profits? That's the biggest issue right now. How much longer as a shareholder can you survive with profits just getting lower and lower, going down and down, and the company saying it might not even be profitable for another 3, 4, 5 years? Who knows? Think about this. Look at the net income. 2018, 19, 2020, 2001. It's all in the negative, 580 million in the negative. And you have to really think about this too. This company had a chance to become profitable since 2003. And the big data algorithms, the scalability, it still hasn't produced a profit. And we have to really think about it. It's not like it's some company that has crazy capital expenditures. They have all these facilities. They have all these structures. It's a company that uses data to get money, and data should be super profitable. Oh, really hard buildings and structures and products that you really need to build out the company, like a car company, like a Tesla. It's all data and it's all analytics. So the fact that it can't make a profit using that's really a problem for the company, and that's why it's valued at $5, or that's why it should be valued at $5. That's the first problem when it comes to Palantir. The second problem, what irritates me the most, is how much a company can trade with a 35 billion market cap at 22 sales multiple. Palantir has a consistently high loss ratio, accumulated deficit in excess of 5 billion, and investors are willing to pay 22 times sales for the loss-making business. It can be difficult to understand why investors are willing to pay top dollar for such a company. And he's basically saying it's just an IT business that's losing market share, that just gets government contracts, but it's not profitable. So he's saying, think about it. You're paying an 18 price to sales multiple for this company that hasn't been producing a profit. And when you think about it, you see what all of these companies are getting crushed in the market. I'm surprised Palantir hasn't been getting crushed more when you really think about it, because all these companies are not generating profits. They're crashing 80%, 70%, 60%, even more than what Palantir is crashing down to. And Palantir still has a high multiple even though it crashed that much. So when you put it into perspective, it could still be overvalued, and people think it still has a lot of potential, right? So that's a big issue. Third reason, dilution. The number of shares granted to insiders is increasing as Palantir, but not in a good way. Dilution is a major issue for Palantir, and executives will have to answer for it sooner or later. Of course, if this dilution continues unabated, investors will pay the price. March 2001 to November 2001 has been going crazy. It's 11% increase in shares outstanding. So, for the conclusion, Palantir won a few contracts in 2021, but I'm still not seeing any profits. I don't see any scalability in Palantir's big data business, which is essential nothing more than an IT project consulting. I also don't see how Palantir's data capabilities translate into a protective moat that protects the company from competition and drives long-term growth. What I do see is a deterioration in the market's willingness to pay exorbitant multiples for stocks that promise revenue growth, but to provide little substantive value. Do you think that just the revenue growth alone is able to keep Palantir's business model growing? Just the revenue growth, not the bottom line, not their margins, none of that stuff. How long can people be invested in Palantir before they see a profit? Can it be another 5 years, 6 years until they realize that maybe it's not generating money? What do you see for Palantir, man, in the future? So guys, tell me what you think about this video. Like it, subscribe to my channel, and I'll get back to you in the next video. Peace!